Welcome to Trading Lounge and the US indices. We'll just be looking at the SP 500. The others will be in the same line as well. So for the SP 500, the 4-hour chart here, we were looking at wave 3, intermediate wave 3 here, and down to intermediate wave 4. We're looking at 5 waves here of minute degree to make the minor wave A. So the orange one is minor, and the blue one is minute, which is actually a full circle here. The half bracket just means a whole circle, and of course the intermediate, so minute, minor and intermediate degree. So it appears that wave A here is completed, minor wave A is completed, and we'll be looking for a move up to the old highs here, maybe a tad higher to wave B, and we should be looking in 5 waves for that structure to play out such. So we can just move these across here a little bit. That B wave, looking at the A wave to move up here in 5 waves, and looking for the B wave to pull back in 3, and that will pull back 50 or 60% of the length of A here, and then wave C. So there should be some sort of Fibonacci relationship between wave A and wave C here as well. Yeah, so let's just dive in and have a closer look at that on the hourly and then the tick chart. So the tick chart becomes quite clear here in that we were looking from wave 4 here, we're looking for 5 waves down, and normally we would look for a move lower than wave 3 here, but I tend to find when a market moves past its 38.2% retracement level to the upside, in this case it moved a long way up because we had the sharp drop here, closer to the wave 4 of 1 lesser degree rather than the 38.2% retracement level, which was about here, then the market structure tends not to go very deep on the 5th wave here. So it's always just a subtle point to worth remembering. So in this case here, we're starting to look into wave A here. So if you basically change from short to being long at this point here, and a little bit sort of late in the game here, but the structure to the upside, our 5-wave structure up here, and then to help confirm that, we've got a 3-wave structure here. So if we take the top of the third structure out here, the A, the B and the C wave, the top of the B wave here, that normally is quite a good indication to move higher. And of course support on the 26 closest largest number is also helpful as well. But of course there's there's always the opportunity to get in at the end of the 5th wave, at the end of the wave 2. It just depends on your understanding of the structure here as well. So we should expect wave 3 here to be longer than wave 1 here. So this structure here is not finished yet, so we only have 1 and 2. This will be part of the 3rd, a 4th coming back, and a 5th moving up. So it's still got to go higher up through here. So the next bear with me a second. The next entry would be on this high here. So, and the reason for that is simply that when we've got 2600 here, then the correction normally plays out between, if I can draw this over this side of the price, because on the tick chart I can't draw on this side. So when you're looking at a whole number here, then it's always important to go down one degree of structure. So we come into the sub levels here, so 10, 20 and 30. And then below here we've got 80, 72 and 65. So that's normally the range a correction will swing in before it breaks out. So when it breaks out, if the 72 or 65 here becomes a retested resistance, then you need to be on that side of the market to the downside because it's rejected the 26. Now going to the upside here, then we would expect the market to find support. If it was going to leave the 2600, move up to the 2700, then it would need to find support on the top of group 1, which is 30 here. So that would be the next thing to look out for here. So a nice tested support on this, on the 30, would be the catalyst for the setup, the trigger to go to the long side. Well, that would be the trigger at the top here. But you can also get a better price than that too, if you're willing to take on more risk. But we can expect some sort of ABC correction here before moving to the upside. All right, I'm going to keep it just simple like that. Alrighty, cheers.